Eddie Ghabour joins us right now, the Key Advisors Group co-owner. We have also got Hal Lambert, the former Ted Cruz National Finance Chair, Point Bridge Capital founder and CEO. Eddie, I'm wondering, though, all that being the case, and I think he's right about that. I mean, it's sort of baked into the cake right now, and the cake is getting pricier, and everything around it is getting pricier. Yet the markets might be pouncing on the notion that the Federal Reserve left open the possibility of more aggressive and frequent rate hikes. So what is going on with stocks?
So our opinion is this is nothing more than a bear market bounce, okay? In bear markets, you'll get these rip rallies that are very violent, and that's exactly what we've seen. But I think these investors that are starting to get a little bit complacent, in our opinion, they need to be very cautious here because the fundamentals that we're going to see happening here in the next quarter with a Fed that's tightening and now has to be more aggressive in their tightening, and we have GDP decelerating, and you're going to have earnings growth going down. I mean, it is not a pretty picture. And look, I'm usually pretty bullish, but at the end of the day, you have to call it for what it is. The Fed made one of the worst policy mistakes in history by not recognizing inflation was an issue last year. Now they're in a lose-lose situation, because the worst position for them to be in is have to aggressively tighten while the economy is slowing down. And I think it's slowing down faster than they have priced in. So I look at this rally for our clients as a way to reduce risk even further, because we haven't seen the bottom of this market yet, in my opinion. And my biggest fear right now is people think this is the start of a new bull market, and I think they're going to be sadly mistaken.
So what are you buying in this environment, Eddie, or what kind of defensive position are you taking?
So, Neil, we're being as boring as we can be right now. And I've been doing this for 24 years, and I've never been this bearish going into a year. We added to treasuries today because of the 10-year yield spiking. Look, our thoughts are non-consensus. We think the economy is going to slow down so much that the 10-year bond is actually going to go down. We've also been buying precious metals. We've added some utilities. And those are the areas that we've been putting money to work, is on bond proxy type investments.
Gentlemen, I want to thank you both, I think.